well, let us get started. Thanks for being here. So we're going to dive into how to find better trades. So we're going to go through kind of a systematic trading and selection process I use based on certain chart patterns and the tools, indicators, and then a number of the different option strategies that really work really well based on different market conditions. So again, thanks so much for being here today. I love these Saturday events. The markets are closed. We can kind of kick back, relax, no noise, no distractions. So, what we're going to go through today is interactive workshop. So, if you have any specific questions, fire away and let's go through the market, look at do some, market analysis, and then show you the tools and, how I go about selecting trade setups and the different option strategies that are used. So again, thanks so much for being here, and let's get started. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, trading, the reality is, as an individual trader, we really have to do a whole lot, and we have to do it most of the time alone. So as you know, one of the most, time-consuming and expensive tasks really out there is just how to find, good high probability trade setups. So over the years, I've gradually combined what I've learned from when my employer paid for everything, which was super nice. But then, after that happens, you have to do your own stuff. So I developed my own kind of research process, the resources that I use, we'll go through some of that. And then I put together my own, proprietary technical trading indicator and systems that I use. And then I developed, a strategic option guide for selecting which option strategy to use when, for the best results based on market conditions and other factors. So this really evolved into a process that helps me find the best trade setups and the best option strategies to use based on the current market environment we're trading, which is always changing. So what I recognize, though, based on my 4 decades of trading, is that my most profitable and most successful trades really came down to certain underlying characteristics. So what I did is I defined these winning trade characteristics, and then I developed a repeatable trade selection process to identify and find them based on a 13-step trade selection process. So, this goes back, like I said, 4 decades. I started my trading career back on the oil side with a company called Coastal Corporation back in the 80s. And, at that point in time, everything was based on fundamentals. We didn't have any the great chart indicators and all the tools that we have now. So it was all based on fundamentals and what we call, top-down market analysis. So eventually, I went on to another company called Transworld Oil, which at that time was the largest trading company in the world. And that's when I started really getting into, different trading indicators. We were developing all kinds of different systems. And so that really kind of opened the door, as far as a systematic trading approach, and then options. So that's where I started trading options back in 1987. So that was where, everything really started to happen. I ran the international trading group there out of Bermuda for 10 years. So really learned a whole lot. And so a lot of, what I'm going to pass on today is starts out with that kind of foundation and, just kind of develop from there. So that's kind of my starting point. So first off, let's take a market review, kind of get on the same page and see what we think is going to happen next based on the charts and some of the other tools that I use. Now, first off, I like to look at the sector to see where money rotation is flowing into. So this is a sector rotation kind of heat map showing the last 5 days, last week. So you can see we did finally have a little pop on energy. We got a little boost on energy, and we finally got a little bit of a nudge to the upside on the markets. We've been under a lot of pressure here in the last few weeks, based on, a lot of different conditions with the tariffs and immigration, things like that. And we finally got a little bit of a, positive push, towards the end of last week. Now, when we go back and we look then 6 months back, you can see where all the activity was. We were doing pretty good on the communication sector service area. Energy was okay. Financials was doing really good, but technology was starting to get hit. Industrials, a lot of this was going to be related to, the slowing economy, so that the growth scare that was starting to really freak the markets out. And then what I like to do is see where things have been really beaten up, and those are kind of maybe some of the sectors that we want to focus on down the road. So you can see here, if we go back just year to date, you can see where the money was coming out of, consumer discretionary, things like Tesla was getting beaten up. We had a lot of discretionary stocks that were just getting, really, pushed to the downside really hard. So this is a sector we want to kind of focus on going forward. It's been really beaten up. The other one is start to, also look at industrials, so that's another sector I want to focus on. And then back again to technology. So at some point, these are going to turn around, but right now, they're under pressure. So these are areas that we can go to really to kind of start monitoring for some setups down the road when everything kind of gets a little bit more stable and calm as far as the markets, and a little bit more clarity, on the tariff situation. So that's one thing I always will refer back to. Kind of, we will look at this each and every day. Now, the next thing I always want to be aware of is seasonality. So seasonality can play such an important part in any kind of market, so from crude oil to gold to the S&P to all the different markets, we can, look at seasonality, which tends to have a reoccurring events each and every year based on certain supply-demand functions. So when we look at the S&P right here, these are seasonality continuation charts, and this is based on the June contract. You can see we tend to get a really good kind of a seasonal cycle low around the 23rd of March. So currently right where we are. So we tend to get this kind of pullback here, and then the markets tend to kind of churn sideways, start to seasonally bottom, starting to get demand build up for, as we go into the spring. And then there's a really good strong seasonal trend potential, that goes up into, April and all the way actually into May. All right, so that's where we are right now. We're starting to get into this start or beginning of a seasonal trend. So that's going to be potentially, a little bit of a tailwind to the market. So if things stabilize, that's a definite positive factor to check the box on that. So that's a look there at the S&P 500. And then we look at the NASDAQ, which has been the big, momentum part of the markets for, a couple of years. And we can see it too has this very strong seasonal trend that starts right around the 15th of March. Okay, so right in here. And this one is even, tends to be even a stronger trend than the S&P with the large cap tech stocks, et cetera. So a really strong seasonal trend there as well. Again, into around the, 9th of April, and then continuing up into May. So these are things that we can, start to, have support to the market, that can add support to the market once we have some of these other factors, uncertainties, events like that, taken out of the market. This is going to be a real big plus. Now, if we look at energy, it too has a seasonal tendency for a seasonal low right around the 18th of March. So at this point right here, this is when the refineries finally start cranking up a little bit more, increasing runs, starting to get ready for the gasoline season. So we tend to have a nice seasonal trend that starts right there, mid to late part of March, and moves really good, strong trend up into, about the 15th of April. And then it can get pretty choppy. And then we can have another run up here to like May and Memorial Weekend, and then the 4th of July right here. But right now, it's potential for a nice seasonal strong trend there as well. So like to start and always be aware of seasonality to see if that's going to be a plus or a minus, for the markets that we're trading. Now, here's some interesting things that I've pulled together. These are some kind of an indicator based on what we call the advanced decline indicator, or advanced decline stock. So these are, indicator based on, number of advancing stocks versus the number of declining stocks. And, what you can see here, this is kind of an interesting chart to kind of be aware of, that we've been, this is based on New York Stock Exchange advanced decline issues. Okay, so right now you can see that we've been up here and we're just kind of chopping here. It's really having a hard time extending further, for the markets. for momentum of advanced stocks versus declining stocks. So it's really kind of getting a little bit toppy right there. So you can see this kind of double top resistance. Now, when you look back at prior times that we've had this kind of struggle, you can see this goes back to the end of July 2021. We get up here and the markets start to struggle, this advanced decline. And then what happens? You can see it really starts to plunge. And then that's where we had the big, drawdown, 20% correction in 2022. So this is one thing that to be aware of. Okay, so advanced decline, we're starting to kind of, dry up as far as that kind of, momentum to the market. So that's one thing that to be aware of, caution flag right there. But the other part of this is the advanced decline volume, which is not yet starting to really shift down yet. So we're still, a little bit of a positive here. So this is, again, based on the New York Stock Exchange advanced decline volume. Now, here you can see it's a cumulative advanced decline volume line still showing higher highs and higher lows. All right, so it's still, you can see we're still trending up, based on the volume between advanced and decline volume. Now it's, tapered off, but the highs are still higher and the lows are a little bit higher. You can see this really nice trend line there. So we'll be watching this. Right now it's still holding up, but you can see what happened back here. In 2021, we started having this fall off, okay? And then we started having a big decline, as far as this volume indicator. And that's when we, you can see it associated with the big pullback that we had in 2022. All right, so this is something to be aware of there that is a good thing to kind of follow down the road. Now, the next thing I wanted to do is what I call top-down market review. So we're going to look at the markets from what I call the macro all the way down to the medium term. And so this can really kind of highlight where we are. So it gives you a bigger overview of the market. So currently, you can see we're the macro trend, which is, I use the monthly time frame to measure what I call the macro trend. We're currently still trending up. So based on, moving averages to kind of track trend, this is a 21 period moving average right there. You can see we're still tracking above that. All right, so this is a big macro trend. Okay, so each bar here is a month. Now, so that trend is still up, but we can see we've been getting these cycle reversals right here, and now we have momentum shifting down on cycle one. Now this is cycle one is my really fast momentum measurement, and so it's gone negative, but two is still holding up. So right now momentum is neutral, on the big macro monthly, and the trend is still up. So for now. All right, so that's just kind of the macro view, and then I shift down to the next time frame, which is the weekly, or what I refer to as long-term trend. It too is still up, and so I like to look at this based on this 50 simple moving average. So that green line, so that's the 50 moving average, and so we're still holding. I mean, it's chipping away at it, so it's just showing signs of weakness, but right now it is still holding. All right, so the trend is still up, but barely, but just hanging on. Now, momentum, though, is negative. You see cycle one and two are negative. So, what typically can happen here, obviously, is this area here can break, and then we have a bigger push to the downside. But the other thing, too, is we could get a little bit of a bounce back. We haven't really had a good retracement check back yet. So I'm looking for maybe a little bit more check back, and then we'll see if we get that kind of fade or, full, retracement reversal. And so this long term shows you that we're, in this period or area there. So we're just, like I said, hanging on. So let me pull up the chart here. You can get a better idea of it. I just pull it up. So here's the weekly time frame. Now, the other interesting thing too is if we look at the monthly, I'll point this out. This is back in April 2022 when we had the big, 20% correction. So what you'll notice here is that, like we are here, we're negative momentum. So we went negative momentum right here, but then it took about one, two, three, four, about 4 months. So it just kind of churned here, and then it finally broke harder to the downside when we had cycle 2. All right, so we're still just kind of hanging on. We could easily pull back. You can see this price action support through here, so that's, going to be down around 5,500 to 53, that area there, if you just look at the bigger picture. And then if we look at the weekly time frame, we'll just drop down to that, which I refer to as long term. You can see it's just kind of hanging on that 50 simple right there. It's been a beautiful trend up since it started back in October 2023 right here, and then it's just been trending really strong above that 20 period moving average, just holding through there. Now we've broken that. Now this is also what we refer to as a volatility compression squeeze. So what this is showing, and this is kind of a dangerous chart pattern and indicator, which shows when you're in the squeeze, which means you're churning your tight market compression. And at some point, it's going to either break up or down. Now, right now, you can see our indicators are showing momentum's negative. So there's a high probability this is looking to break harder or lower to the downside. And so then we have to look at, okay, well, where's the next support area? And so we can do that by looking at price action support, moving average support, et cetera. But the markets are right here on the ropes, so we need to really watch carefully over the next week or so to see what happens. Now, we did get a little bit of a bounce here on Friday. So here's the medium-term time frames, and we just pull this back up, and then we'll pull that chart up again. So when we look at this, this is the daily time frame, which I refer to as medium term. So the trend, we're in a downtrend, so we're below our key moving averages that we track. So we're below that 50 simple moving average. We're now also below the 200, but momentum has gone neutral. You can see cycle 1 is up, 2 is negative. Now, what this tends to mean, what this means is that when you're neutral on momentum, this shows that there's a potential for more of a retracement bounce in this situation, okay? So that's what I think we're looking at right now, is maybe a retracement bounce to first that 200-day moving average. So this is kind of my first target right there. Okay, so we have cycle 1, momentum's gone positive, now 2 is negative. So this is not to get aggressive long, this is a retracement kind of a short cover rally. And so the first key area would be right about here, this 57, 570, 570.47. So this would be like 575 on the SPY. So we've got the 50 simple moving average and the 21 exponential coming in there on the daily. Now, if the market can kind of penetrate through here, now the next, my kind of base case would be back up here to that 50 simple moving average, which is sloping down. So that's about 5,900. So for next week, we'll see. Can we get up here? Can we test that 200-day at 57.47, or is this where we're going to fail? So this will be a key. So if we fail here, then I'll be looking for short trade setups on a retracement failure. But if we do break above here, this is the prior week's high, and we can get above here, then we can maybe have a little bit more movement back up here to this area, and then we'll see if we get a retracement. This will be the really key area right there. All right, so that's kind of the way I'll be looking at the markets for next week. Potential retracement failure here, or a momentum break here would be another short trade kind of setup right there. All right, so that's kind of a top-down market review analysis there of how I look at things and, to set up trades. Now, the next thing is selecting the best swing trade, and this is going to be based on a couple different things I'll look at. So first, I want to see, okay, what is the market trend, the cycle trend, okay? So currently, is it neutral, down, up, sideways, or extended? So right now, the medium-term trend, we're down, right? Now, then the next thing I always want to be aware of, what is the market condition? There's always going to be market uncertainty, but try to quantify it. So right now, we could be high, low, or extreme. Right now, we're kind of in a high market uncertainty. Not, the extreme is kind of war, pandemic, things like that, but we're high uncertainty, right? Now, the next thing is, I want to look at relative strength. So when I'm looking at a specific setup, I like to look at the stock's relative strength, and we can measure that on a couple different ways with momentum and relative strength to something else you're pairing it with. So that's another thing that I'll always look at to, in a stock selection. The next thing is really important to me is what I call my kind of really high probability chart patterns. So I've kind of identified, put together 5, chart patterns that I look for. Now, when I spot and identify the specific pattern, yeah, Rachel can verify all into your questions there. Feel free to ask her. All right, so the next thing, so step then 1 through 5 is, basically, again, identifying the market cycle, what cycle are we in, what market condition, and then, I want to validate the strength of the specific stock or ETF or whatever we're looking at to set the trade up, okay? So these are all the steps that go through before I ever, put the trade on or send it out. So first off, again, identify that market cycle. And again, right now we're downtrend. Now, just a refresher here, this stuff that I'm showing you, this kind of process is, goes back based on, my 30, 40 years of trading. And again, looking at, and you do the same exercise for your own trades, but go back and look at your winning trades and your losing trades, and then just break down what's the common denominator that makes them win or, or lose. And so you're going to really see some really key things that happen over and over and over in all of your winning trades or your losing trades. Okay, so this is what's these are some of the steps that I've identified and put together to create kind of this systematic trading process. So first off, we want to identify the market cycle. That's one thing I want to know in directionally. Are we up, down, or sideways? That's going to tell you a lot about then how to trade and what trade setups to look for. And then what option strategy to use. Okay, so currently we're in a downtrend. Now to set the trend, an established trend, I use 4 primary moving averages to identify and track trend to define areas of support resistance. So I'm going to key off the 8 exponential moving average, the 21 exponential, and then I'll look at the 50 simple and the 200. So these are my key kind of 4 that I always look at. Now there are other ones that I'll always be aware of where they are, et cetera, but these are the kind of the key for the system that I use. All right, so that's the, to help you identify cycle. Now the next thing you want to do is quantify the degree of uncertainty, okay, to then tell you what kind of option strategies or how to trade. So currently, there's going to be high or extreme, right? So there's always going to be market uncertainty. So currently, you can look at price. Are we at a price where we're at extreme highs or extreme lows? Currently, we're, pretty much at extreme lows. I mean, obviously we can go lower, but we're at extreme lows and not extreme highs. So look at that. All right. So that tells you something. Okay, we're at extreme lows. We're at key support here. So are we going to get a bounce or are we going to break through that support? All right. So those are things that help you to analyze what kind of trades to be looking for, over the next day, next week, 2 weeks, etc. Now, the other thing we're currently experiencing, we're, into potential trade war. We're not there yet, but that's what's spooking the market. We're getting this tariff stuff, and plus the, a growth scare, right? So as we, talk about tariffs, that's putting a lot of people on the sidelines. Potential for slower growth in the economy, and then that could lead to potentially a recession. So these are things that we want to be aware of, identify, quantify. So right now, we're in high uncertainty. Extreme uncertainty would be, if we did have a major war or like the global economic crisis back in 2000, 2008, or the pandemic in 2020. So those were extreme, right? Everybody can remember those. And so these are the, when you're extreme uncertainty, you really want to trim that risk. And, this can help you to identify what to do. Now, the next thing is what I really base all my trades on, as well as, momentum. All right. So super important for your trades. So when you're trading any type of market environment, it really all comes down to price direction, timing, and then managing your risk. So if you go back and you break down your winning trades and your losing trades, if you look at your winning trades, you're going to see that you got the direction right and you got your timing right. Now, and then it's managing your risk. But if you look at your losing trades, you may have gotten your direction right, but your timing was off, right? Or that's going to be a big thing. But trading is about price direction and timing. All right. So even if you're in a sideways market, what's the direction? To direction sideways, just sideways. So we're always going to have direction, and then timing is going to be key. Because if you get into, let's say, you get into a market cycle and you come up here, the markets are cycling up and you buy here, that's a bad timing, right? And then it comes off and then it goes up, right? So bad cycle. If you stayed in it, you may have weathered the storm, but most likely you got stopped out before it turned back up. So timing is a really crucial component of your winning trades, or you'll see that has a big factor in your losing trades. All right, so that's what you want to look at. And then, so for doing this, I use specific trading tools that help to signal price direction and market timing. And these are going to be based on momentum flows. All right, so these momentum indicators that I use, what they do is they measure price strength or weakness. And when you're measuring across multiple time frames, that's what really creates a dynamic trend following indicator that you can use for showing you market direction and for helping your timing of entries and exits into specific trades. All right, so it's going to help you a number of different ways. So first off, it's going to help you to identify new price cycle trends earlier, okay? So when we're coming down, we get a cycle reversal based on momentum flows. That's going to help you identify that change, or it could be the other way around. Then it's going to also help to validate strength or weakness of a specific trade. So maybe a long trade, you want to see multiple time frames that have strong momentum, so that's going to tell you, okay, this thing has really solid momentum, has more potential for more upside. Or if it doesn't, then it's going to show you that it could be one that could easily falter. Now, so based on that, the more momentum, across multiple time frames, that's really going to help you stay with the trend and then, maximize your profits. So these are really crucial, really important things that I look at, momentum. So that comes into play on every trade that I select, for setup, and then I'll use for, send out by the alerts. And then the next thing are these chart patterns, okay? So these are what I call winning probability, high probability chart patterns. And there are 5 that I've broken down over the years I've been trading, and these are the ones that I look for. And then when I identify it, then I can say, okay, this pattern's perfect for this type of option strategy, etc. So here's kind of a brief kind of flow through of what they look like. First off, we've got what we call the volatility compression squeeze. So this is one specific pattern that could be in these other 4 types, and I'll show you examples of each here in a minute. But the other one is what we call the cycle high reversal. So this is actually when the markets are coming up, they run out of gas and they cycle high and they reverse. Then we have the cycle low reversal. That's when the markets have been hit really hard and then they turn back up. So these are, when they've been below all the key moving averages and they turn up. This is when they're above all the key moving averages on the upside and turn down. Then we have what we call the cycle low retracement. So this is when we have a move to the downside into a key moving average, okay? Retraces into key moving average and then bounces off that. Or it could be the other way around, cycle high retracement, where you have a big, huge resistance moving average that appear and it can't get through it and it rolls over. So these are really specific, identifiable patterns that I look for, and then that'll tell me to kind of set up to do as far as the option strategy to use. And the volatility squeeze compression can be within any of these 4 patterns. All right, so these are what I not try to identify for any trade that I'm looking to set up. So here's the first kind of a really kind of summary of what the volatility squeeze is. And so what this is what I call the volatility compression squeeze pattern. So is identified when you have a period of price consolidation where price is really coiling really tight, just churning back and forth in a tight range. Now, at some point, it's going to break out of that range either up or down. And those tend to have very explosive momentum breakout movements up or down. And these can be really fast, which is great. So you're in and out of the trade quickly, which is which is great for controlling your risk. Now, when we have a specific security, it could be anything, futures, it could be stocks, or it could be ETFs. When we have a security that's in multiple time frames in a squeeze, then the breakouts can be even more powerful with greater follow through, like a kind of what I call a chain reaction explosion. And, like lightning in a bottle, we just want to bottle that kind of trade up. So this is a really important pattern that I look for. So this chain reaction, what happens, you'll have a lower time frame that starts to pop, let's say to the upside, that triggers the next time frame, that triggers another time frame, and before you know it, you've kind of got a tidal wave. You started out with a little bit of move to the upside, and then all of a sudden all these other time frames kick in, and now you've got kind of a wave or tsunami. All right, so it's a great setup to be looking for. So fantastic then for your swing trades or even day trades, and this is what gives you the big timing edge, okay? So this gives you that edge to get in and out of trades, fast and quick. And remember, when we're trading, time equals risk. So the shorter period of time we're in and out of a trade, the better, the less risk, right? So that's what, and when we're in markets that are really kind of high uncertainty, we want to shorten that trade duration because of that kind of risk. And that kind of pattern can really help to do that. So here are a couple examples. Like this was just a beautiful, Netflix. You see all these squeeze patterns here. So my indicators show it based on these dots. We'll go through some pattern examples here in a bit, but you can see here, see how tight that the price is right here. And those dots are then I put into my indicators. So that says when the squeeze starts based on the coding I put in, and when it ends. And then when you break above your prior highs or lows, that's where we get the trigger for the big bounce. So you can see here just in Netflix, it was contained, that blue line is the 200-day moving average. So it was just churning right below that 200-day. See momentum, this is where we get the forecast for direction. So momentum cycle 1 is up. This is fast momentum. 2 is going up, that's confirming momentum. So what that is telling me, the probability is for this to break to the upside. So there it breaks the 200, we get in, jump, boom, you're in, all right? So you take your shot. If you don't take a shot, you're never going to score a goal. So this is a key indicator right there that helps a lot of times for these type of patterns. Okay, here's another one. You can see the dots created here, and then you can see the break in that prior high, that area there, then a big spike. Here's another one. Consolidation. Now these things, look what they have in common. Momentum, see cycle 1, cycle 2, telling me potential directions up. Cycle 1, cycle 2, potential direction up. All right, so that's, it's not that complicated if you have the right tools. And then the other thing that we look at really long and hard is reversal. So here's cycle reversal, that's step 1. Then my momentum shift up, step 2. Then the trigger entry above that prior high, boom. Here's another volatility squeeze here. Cycle reversal, step 1, step 2, momentum, step 3, break of these prior highs, up she goes. Here we go, cycle 1, reversal, momentum, 2, break of those prior highs, up we go. All right, so now with that particular pattern, then it helps me identify and say, okay, what type of option strategy would I use? So this one I might use a debit spread, might do a long condor, or maybe a calendar diagonal. All right, so these are, it's just a real step-by-step process that I go through. Now here's a cycle low reversal. So here's where the markets have been just hammered in this situation to the downside below all the key moving averages. You can see here, the price SPY is below the 8 exponential, the 21 period exponential, all the, the 50 simple, et cetera. And it's just getting crushed, hugging that extreme range bands all the way down, just going to the 8 exponential, bouncing off that, just, you can see perfect channel down. Now at some point it will stop, right? So that's where the indicators come in that I use. And so you see here, first we'll get what we call a cycle reversal, step 1. Then I look for momentum. Cycle 1 is going to be fast, that goes first. And then I get my confirming momentum indicator 2. And then right here, that's where we safe to start putting your feet back, toes back in the water. All right, so that's just a quick overview there. And these I'll use a debit spread or maybe a butterfly, long condor, counter diagonal. All right, so just kind of the option strategy that I can look to pair with it. Now here's an example of a cycle low retracement. So this is when we're coming into major support and looking for potential holding that support and bouncing. So here's an example. This was gold cycle low on both a weekly and a daily. So that blue line is the weekly 200-week moving average. And you can see it was also above the 200-day moving average. Question, what is the difference between a long condor and an iron condor? Okay, good question, I'll show you here. So with this one, you can see we're coming down, retracement off that moving average and a bounce, right? Now, again, look at what I'm looking at. My indicators, my reversal indicator, momentum, where's it going to go? My probability of direction is going to bounce to the upside at that point, right? Debit spread, butterfly, long condor, calendars. Okay, so here's the difference between a long condor and an iron condor, okay? So when you look at an iron condor, all that is a, let me erase this here. So do you do credit spreads? Have you ever done a bear call credit spread, or have you ever done a bull put credit spread? Well, yes, okay. So if you've done that, then if you combine the two together, that's what we call an iron condor. All right, so it would look like this. So you've got a call credit spread, and you've got a bull put credit spread. That's an iron condor. All right. Now the big difference, we do some iron condors, but we do a lot of long condors. Huge difference, because this gives you what we call a negative risk ratio. So for example, in a credit spread, they're what we call probability trades, right? We're looking at the deltas and things like that. But when you put these on, so your tendency is you're having a high probability based on your delta that this will be a winning trade. But the other part of it is that they're a negative risk ratio. So basically what you might be risking you could risk typically $4 just to make $1. Okay, so you're risking $4 to make $1, your negative risk ratio. Now, the long condor is a combination of a debit spread with a credit spread, and these will always have a positive risk ratio. So you could have a long call debit spread, and then you offset some of the risk and theta decay by adding a bear call credit spread. So that's what we call the long condor. Or you could do it with the puts for a downside move. So you could be long a put debit spread, and then you short against it a bull put credit spread to reduce capital at risk and reduce theta. All right, so these will always have a positive risk ratio. So we do a lot of those, but they're going to be very low risk and high return. 2 to 1, 3 to 1, sometimes 4 to 1. And if we do a butterfly, we might get 10 to 1, 15 to 1. All right, so that's that. And then we have the cycle high reversal, which is where you come up, you're above all the key moving averages, and then you finally get the market gets fatigued, it starts to lose buyers and gets exhausted, and then you have a move down. All right, so in this situation, it's great for credit spreads when you have this buying exhaustion, like to sell out of the money credit spread. So it could be a credit spread, debit spread, butterflies, etc. So these are the chart patterns, and these really then help to identify what kind of option strategy to trade based on this pattern. And then here's your cycle high retracement reversal. So here's like XLK, the technology ETF coming up here. That blue is the 200-day. So it gets up here. Look at that, it's starting to get reversals, those arrows here. See these reversals? And it can't get through it. And then what does it do? It rolls over. So this is great for credit spreads, debit spreads, just different things there. All right, so those are really key for helping me decide, okay, what's the best option strategy to use based on that market condition. Question, what role does volume play in your analysis? How do you determine whether the volume is actually demand or supply, which is the dominant force? Well, volume is, I just look at the average daily volume, and if you're, but that's not going to be the defining factor of the trades that we do. That's one potential condition that goes into it. But if we get a good, solid, strong volume, that's going to, be obviously better. But what I'll look at, I'll look money flow to see if we're trending, and then I'll look at kind of daily volume, that kind of stuff. So that's just another plus, if we get a good volume day or something. But more, more kind of fall back on momentum and then the pattern, and then I will look at to see if there's good volume as well. Okay, but that's not the overall determining factor of the trade. Now the next thing, steps 6 through 9, is the scanning process. So you want to be able to spot the trades and the various trade setups before they happen. So I do a number of different scans. One of them that I like to, like I said, I do a couple different scans, but one that I really like to use is what I call my volatility squeeze scanner. And so what this does is puts together a list of anything that's in this volatility squeeze compression pattern. So this is all based on a coding that I put into the system with the volatility squeeze in, and then I put the code into a scanner that can look for it. So you can just see in this just quick example, you can see here it says squeeze daily. Okay, that means these are all volatility squeeze on a daily time frame. So you can see there's a whole lot here showing up, right? And then it shows you here, it shows you the number of days in the squeeze. So you can see here, just in this example, Costco is showing the number 18. So that means it's been in the squeeze for 18 bars or 18 days. And then I've got it color coded based on momentum. So this is showing that my cycle 1 momentum indicator is linked to this. So it shows you this negative momentum. It's red. Here you can see TJX, 18-day squeeze. It's green momentum. So this is where we can quickly identify things that are in squeeze. We can click on and then see if the pattern's ready to break out up or down. So this is one way that I've found to really quickly identify good trade setups. A lot of the trade setups come from this scanner, and then another scan that I do is what I call momentum breakout scan that I put together. So let me see here real quick, 1 second here. I'll see if I can show you a couple of scans real quick here, see what's, really haven't looked yet, but let me see if there's anything setting up. 1 second. Let me get my charts back out here. Okay, so these are all things that I'm looking at. Yeah, okay, yeah, 1 second here, Tom. If you want to go ahead and use this link again, powercycletrading.com/special. Okay, this will give you the alert service for 6 months and the trade club for 6 months. And there's 2 pay, and then put in that small cap alert 20. That gives you the 20% off. Yeah, it's a great deal. All right, so then, let's see if we see anything setting up right now based on a volatility squeeze real quick. So this is another tool that I use. This is my kind of it shows you everything in a squeeze or momentum across multiple different time frames. So this is a quick way that I can go through. So let me just click on here. So I'm gonna look over here and I'm gonna put up here, let's see, I'll just put up my list, my personal list, watch list here. And so it's populating, then I'm just going to click here. This is anything in a daily squeeze. That's kind of where I first look to see what's going on. And you can see quite a few things have popped up here. We've got, GM, is in a daily squeeze. It's been in a squeeze for 19 bars, 19 days. Momentum is green, so that means the cycle 1 is positive. You've got GM, 3M. Let's click through a few of these and see if anything looks pretty decent. So I like to kind of do this quickly analysis on a 4-hour with my daily. I'll just click through a few of these real quick and you can kind of check it out. Actually, this looks pretty good. Put this on your watch list. GM looks like it's getting ready to break out. All right, I'm gonna add this to my watch list since we're doing this. 1 second. And so we'll look at this. We'll look at this Monday. So look, see this is the volatility compression. See the dots? You see my momentum indicators are positive. All right, now it's pushing into the 150 moving average. This looks poised for a break to the upside. Okay, and then there are other things I look at, but this is just one quick way to check it out. Here's another one. This one's kind of stuck in the middle, doing nothing to do there. 3M, nothing in the middle of the range. Middle of the range. This one, look, see this? This is Coke. This one is one to put on the short side, possible breakdown. This is the prior, see that dash line? That's the prior week's low. I'm going to put this as a potential short. So I can, this is how I just find so many trades so fast. Look at momentum, cycle 1 and 2 are negative. Now it's got big support down here, but this is about to break down. All right. LBS, it's broken pretty hard below that 200. It's just kind of right here on some support. Let's see what else we can find. This actually looks poised, but look, see there's this big gap, so it could fill that gap and then take the next leg down. See this area? This is key support right there, 96. That breaks, then we're looking down to 91. So we'll put this on, but see this kind of trade, a lot of times what we'll do is a calendar targeting that. So that tells me, okay, hey, let's maybe look at a calendar targeting this support area. So I'll make a little note there. Hey, we'll look at Monday, we'll look at a calendar on this. So quickly we can find so many trades. There's always a good trade out there. And then this tells you then what option strategy to use. I look at here. So if this breaks, we could, have a pretty good little quick move down here towards 91. We could do a lot of different things, or I could do a really cheap, low risk counter trade targeting 91. So that's a possibility. Honeywell, middle of the range, not doing anything but to watch. AT&T, trying to push up towards that top end. It's got, look, see a good momentum. See this, my momentum indicators below here. See that? All the time frames are positive up to the daily. And this top row is everything in a squeeze. It's got a daily squeeze, 4-hour, and 60-minute squeeze. So I can quickly assess all these, different securities that way. I'm trying to see if there's anything else that looks really good real quick. Alibaba is is squeezing and momentum's going negative. So I might be watching Alibaba. Everybody's loving Baba, but it looks like it might take a little bit of a pause here. CCJ, let's see if there's anything else that pops up real quick. IBM, this is one we've been playing a lot. This one still has potential for more this is the one we'll maybe look to short again. I'll show you one short we just finished up on IBM. Qualcomm, nothing. See, Palantir looks real good. PLTR, this looks really good. See that? Positive momentum cycle 1, 2. Look at the momentum cross here. See that? And a daily squeeze. See that? Daily squeeze, positive momentum. This looks pretty good. Intel, yeah, we'll take a look. Anyway, those are a couple of quickies. Intel right now is starting to fade a little bit. You know, it's had that big push up. It's at the 200. Looks like it's probably going to go through some consolidation here. I would do nothing here. Just let it see if it can hold this area here and then get the next leg up. Right now, you know, the big spike has been made. So see if it can consolidate and hold this area in here. So nothing right now. Needs to start building a base right in here. Okay, so those are some really key things that I look at. There's another scan that I do, but that's one of my major scans. And then here's the next thing is the next 10 to 13 are the different option strategies, you know, to manage the trade. So now here's the alert service, you know, all the input here. So we can go through this and I'll show you all the different trades we've done recently. These are all alert trades, and these are going to use the same process that I just showed you. So the goal in trading is to have more winning trades than losing trades, since it's impossible to have all winning trades. But, you know, we want to have that percentage in our favor of winners. Now, you could have, you know, more losing trades than winning trades and still have a profitable, you know, trades, but that's going to have a lot of equity drawdowns against you. So it's going to be a lot of stress. So this keeps your, you know, the stress low, because we're looking for high winning probability trades. So with this reality in mind, the performance to date of the trade setups, which I've sent out to my alert members, has been actually really remarkable if you really look at it and break it down. So I started the first alert back in 2018, and through yesterday, 2025, 6, 7, 8 years, wow. We've had 845 trades closed out. Again, these are unaudited, just the summary. 609 winners, 57 break even, 179 losers, high winning percentage going back to 2018. That's awfully good. And so here's Telegram. This is what, you know, I use. I showed you that earlier, but you can see here when I send out a trade, they're pretty detailed, and you can see the time stamp right here. Okay, just for example, this was Friday. It said NVIDIA long monthly butterfly option pinning trade, take profit, close trade today, etc. Here's the IBM trade that we had. I'll show you this. This was IBM short, trading around 240. If long, the 21 March put Condor, trade expires today, be taking profit, max profit today on a close between the spreads, currently up $146 per spread, or a 208% return on capital. Okay, so that's Telegram. Those are sent out within seconds when I put it in. Boom. And here are some trades that we just have recently done. These are butterfly long condor. Somebody asked about the difference between a condor and an iron condor. So these are all long condors. So I started sending these out back in May of 2019, and through yesterday, we've had 210 trades closed out, 150 winners, 15 break even, 45 losers, high winning percentage, 79%. Now, these are very low risk trades. You know, maybe the average risk, you know, is $75 per spread, you know, around there. But potential return can be anywhere from 2 to 1 to up to 25 to 1. So risk $1 to make $25. Where else can you do that? But you can do that with a butterfly. The long condors typically will be a return of, you know, 1.5 up to maybe 3. So, but also very low risk trades. We do a lot of long condors. So here's one that we just did this past week. This was on IBM. This was a long put condor. So this was the alert that was sent out. This is what you'll get. All right. So it says this was on the 18th of March. It was trading at 246. It says new IBM short trading around 246.45. Daily cycle high retracement. That was that retracement into moving average falling off. Okay. And then it says daily negative momentum. My momentum indicators are down. I had a momentum cross. That's another indicator I use. So first target 240, next target 235. Here's the trade. It says buy one condor. 21 March 245, 242 and a half, 235, 232 and a half. Put condor at around 75. Or, so around 75. So you might get in at 70, maybe 80, around, it's sometimes you get better, sometimes you might get a little worse. Now, a lot of my members, the other thing too is point out when I send these out, these are directional trades. So I will always send an option strategy trade that I would use based on that market condition. But a lot of members, they just do their own thing. They don't want to do maybe the condor. They just will go out, okay, if we're going to go short, they might just buy puts. Let's just, long puts, or they may just sell the stock. They just want my trades, right? So you can do that. But when I send this out, you can do it however you want, but I'll always give you the option trade if you want to use it. But again, a lot of members will just say, okay, I'm going to go short, then IBM, boom, sell the shares, or boom, let's buy the puts, maybe sell, something like that. And then here it was on the 21st. This was Friday. It says IBM short, trading around 242.24. This was at 2:42 p.m. So if long, the put condor, take profit today, max profit on close between spreads, currently up $160 per spread. On the risk, we got this trade on for 70 bucks. It was up 228% return. Okay, so that was the sent out towards that end of the day. And all right, so that's what it looks like now. Here was a trade set up. You can see just again, stepping through it, my indicators right here, cycle reversal, momentum cycle 1 and 2 are negative. So went short this day here. It was trading at 246 right in here. So we went short using this put condor. So super low risk though, trade setup when we put this on. And so we wanted to keep the risk low. And so did this with the put condor for a risk of $70. That was it. So went out and it was trading at 246.45. So this is 21 March series. That was a Friday's expiration. So bought the 245 put, sold the 242 and a half. So here's, what that would look like. And then at the same time, we can leg in or we can do these all at once, then sold the 235, 232 and a half. All right, so did that. So the put condor. Yeah, so on this one, we had a long put debit spread. See this? See this? Long put debit spread right there. See? Long the put, short the put. So long the 245 put, short the 242 and a half. And then we had the short full put credit spread, short the 235, long the 232. If it goes out in here, max profit, super low risk. Look at our risk, 70 cents, $70. All right, so here's the trade, 245, 242 and a half, et cetera. So then just breaking it down, you can see your max risk was $70 on the spread. Now the spread width is $2.50, $250, right? See that 245, 242 and that, less the cost of the trade. That's the total risk. If everything blew up, we'd lose 70 bucks. But look, if it went out right here in the middle, the potential profit, 180 on your risk of 70, 257% return. Plus the other thing that I'm constantly looking at is what we call theta. This will always give you a positive theta trade. So that's the other thing that goes into my analysis of the trade. So here it was. Now this was, A lot of different times you could take profit, but here it was going out towards right at the end of the day. It was trading right there. Wasn't perfect, but very close, okay? So this was trading at 242.34. So, you know, right there. So this went from 70 cents, 70 bucks up to 228. That's $158 per spread. That's a 225% return. So put on the 18th, taking off the 21st. Nice trade. Low risk, positive data trade. Has everything that, you know, we like to see. Yeah, so Rich did, a lot of members did great on this trade. And so this trade, we'll probably do this one again. Now here's another, this was a killer trade. This is one we did recently too. This was on a short trade SPY put condor. This is one that we started out with a put debit spread, and then we adjusted this to a put condor to lower the risk, and it gave us a huge return on really low risk. So it says here, it says, this was on the 10th, SPY was trading at 568. It says, new SPY reshort, trading at 568, buy a vertical spread, the 11 March to 563, 560 put debit spread around 85 cents or $85, okay? So did that first, looking for the market to move down. Then the next day, we adjusted it. Then on the, you could do this or not do this. Some members just, you know, buy the puts and they don't do anything else or sell it, right? But I will always give you the option trade plus adjustments, you know, whatever. I'm always looking to reduce the risk, increase beta, things like that. So here was the next day. Now, when we set it up, it was trading at 568. Now it's trading at 555. So I sent out alerts that if you're long that put debit spread, trade expires today. But I said hold short balance for max profit on a close today at 560. And then I said adjust to a long put condor for more profit. So try to increase the profit. So when it was trading down here at 555, added a bull put credit spread to it. Selling the vertical SPY 11 March, 550, 547 to increase the trade profit, and that's also reducing risk. All right, so then you can see here, here's 11th. Now it's trading down to 558.85. Now this trade was up $205 per spread. On the risk, we had reduced the risk because we had adjusted this to the condor. I'll show you in a minute. This thing was now at 476% return. And here it was going out right on the close. It was trading at 558. Now this trade was up $257 per spread, 597% return. So these returns are definitely possible if you do these trades like I set them up. Question, could you use a broken wing butterfly instead of the long con? No, this is specific. There's a big difference between the broken wing butterfly. No, this was set up perfectly. Yeah, I would not use the broken wing. So here it was, but I could, you know, if we had more time, I could show you why. So here it was. We set the trade up, had a big hard move down when it was right here. Brought in some extra profit, reduced the risk by converting this to the put condor. So here's what it looked like. So we originally had the 563, 560 put debit spread on. Then when it ripped down, sold the bull put credit spread 550, 550, 547, reduced our risk on this trade down to $43. That was now the maximum risk, 43. Okay. Look at the spread width. It's $3 wide spread, right? Lesser cost 43. So potential for this trade, if it goes out in here, would make $257 per spread. Our risk is 43. That'd be a 597% return. Okay, and so basically that's exactly what it did. So then this trade closed down inside our two spreads. So it closed right there at the end of the day. And so it was trading at 556.97. So the spread had blown from 43 bucks to 300. So it was up $257. So the spread, that was a 597% return. And then here's a long condor. So this was one that we'd set up on NVIDIA. All right, so this was on the 13th. And so, you know, I mean, these are condors we've done. I'll show you some butterfly. We do all kinds of stuff with this alert service. And if you come in the trade room, a lot of times we'll, you know, be going over these trades in the trade room. But here was one that we did on NVIDIA. It was traded at 133.98. And so we did a long condor on NVIDIA. NVIDIA long trading at 133.98. Daily cycle low, retracement reversal off 150 simple moving average, breaking back above prior week's high, testing 50 simple daily moving average in 21. Okay, so I'm just trying to give you all the details of why I'm doing the trade so you feel comfortable taking the trade, and then you can decide if you want to or not. Daily positive momentum, target 141, buy a condor. Or you just buy the calls. You know, you can do your own, a lot of, like I said, do their own thing. So here's the 21 Feb, 134, 137, blah, 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 at around $1. Okay, so that's going to be your max risk, a debit. Now here it was on the 21st. Now it was trading at 140.17. You set it up, it was 133. So if you're just long calls or whatever, boom, you're taking profit. Now at that point in time, now this trade is up, currently up around $170 per spread, 170% return. And then here it was a little bit later. Now it's trading at 139.22 and currently up around $185 per spread, 185% return. So that this was, you know, another way, you know, trade that we did on this. NVIDIA keeping it super, NVIDIA been crazy and wild, so we want to keep the risk super low. So went long here, and again, here are the tools that I'm using. So, cycle one reversal, momentum, went long here, out there. So here was the trade. This was a call condor. Okay, long the call condor, short the call spread there, set this up for $1, goes out right in the middle right here. So went from $1 to $2.89, so up $189, 189% return. Positive theta. So pretty cool trade. Now these are really fun. These are the lotto ticket. These are butterflies. So here's some that we do. These are really special. So here's one that we just actually did on NVIDIA, right? This one wasn't perfect, but it was still made pretty good money. I'll show you how low the risk was. So this is one that we did on NVIDIA, was on the 12th of March, and NVIDIA was trading at 115. And then you can see here it says new NVIDIA long binary monthly butterfly. So what this means, binary is we're going to either make money or lose money. Okay. But the reason we're going to do it is because our loss, we're going to do these for so cheap that if we do lose, it's very minimal. But if we win, we can have a huge winner, big, huge winner. All right. So these are based on potential, what we call a pin. All right. So here's trade 115, trade set up for a potential monthly expiration pin at 122 next Friday. Okay, heavy option open interest at the 21 March strike, over 377,000 contracts. Buy the NVIDIA butterfly, 118, 122, 126, hold bid at 30 cents. We were just going to hold it until we got it. If we didn't get it, we weren't going to do it. All right, got the trade on, and here it was, then took the trade off the 20th. This is where it was max profit. Yesterday on the open, sent out alert to, you know, if you're still in it to close out because it was pulling back. But here it was, you know, in the morning, it says NVIDIA monthly option pinning trade, trading at 118.81. You know, at that point it was up $85, okay, $85 on the spread, but our cost was, we got into the spread for 26 bucks. So this time it was up 326% return. Now, Later in the morning, now it's trading at 190.1966. I sent this out alert. I said, make sure you're take some profit here today on this up move. And then I sent out another alert. I'm constantly sending out alerts to kind of keep you informed. So it says currently up around $131 per spread. Now it's up 503% return. All right, because we got into this thing for so cheap. So here was the trade set up. All right, so again, cycle reversal. And we're going to go right here. We were looking for this right there. There's big option activity at that 122. There was good kind of resistance right there. So this is a specific trade for pin. And here's the butterfly that we did. Okay, so we were going to target 122. So did the long the 118, short the 122, short the 122, long the 126. So we had this butterfly on. $4 wide, right? $4 wide butterfly. Look at that. Look at the cost, 26 cents, $26. So that's the risk. So that's why it's binary. So, you're risking 26. So a couple cups of, Starbucks, whatever, that's one contract if you did this butterfly. Now, potential, if it was to go out there and pin, you'd make $374. That's a 1,438% return, right? If you make 374 on your risk of there, these things are huge, but they're also low stress because if you do lose 26, that's not the end of the world. So here it was. Now I'll show you this one. It wasn't a match profit, but look, just trading right there, this thing was up. It went from 26, now it's up to $1.57. So this thing was up $131 per spread. It was up 503% return. Okay, so pretty cool trade. Now here's another one. These are all alert trades. Here's one that we did on SPY. This was a put butterfly. All right, so this was one that we did, on the 6th. So here it was, God dang it. Let me see my drawing tool. I messed it up. One second here. Oh, here. I was wondering. Okay. So here's what we set it up on the 6th. So here it says new SPY pending trade, trading around 573.80. Binary put butterfly. Okay, so here's the buy. So here it shows you exactly what to do. By the 10 March, 565.60, 55 put butterfly around 40 cents or lower. The debit paid will be your risk. There will be no adjustments or stops used. This is a binary trade. Okay, set up for high returns. Now here it was on the 10th. Now it was, it said, I sent an alert, said trade expires today, trade around 567.30. If long this butterfly, look to take profit today on any move lower towards 560. And then here it was later on in the day, 2:35, sent out another alert, trade expires today, trading at 561. If long this butterfly, make sure to take profit today and close trade out prior to the close. Currently up around $232, 595% return. All right, so that trade alone would, pay for your alert service, right? Today you get this at 552. This one little trade, if you just did one spread, would have paid for the whole alert service. So if you did one spread, you make over 500. If you did 10, you can do the math. So here was the trade set up. Here's where we're looking for this area down here. And this was a really quick short trade that we did, super low risk. So here is the trade set up. We were targeting that 560. So did the 560, 560, 55, $5 wide spread. Cost of trade, $39. Potential profit, 461. on your risk of 39, potential to make 1,183% return. But if you made anything in between, it's still a huge return on your capital at risk, super low risk. In this market, high uncertainty, this was a great trade. So here it was where it went out almost to the top of the tent right there. So on the 10th, it was trading out 560.32. So this went from 39 bucks to 456 bucks. So it's up $417 per spread. This was up 1,069% return. And this one was beautiful. This was as perfect as you can get. It's hard to be perfect in trading, but this one was. Oh, great. Yeah, Rich did it. Rich said he pinned it perfect. Yeah. Yeah, with the trading archive videos. So the trades, there's educational material, different things in the traders educational vault, different things on spreads, just, different educational material for you that's comes along with your alert service for free. And then any videos, I've got a lot of the videos I've archived on different trade setups, so you can go back and look at those. All right, so here's the Tesla trade. This one was just unbelievable. This one was another penny trade. So we set this was up on the 8th. It was trading at 189.35. So here's the trade setup. New Tesla long binary monthly option pinning trade. Trade at 189.35, set up for potential monthly expiration pin at the 200 strike next Friday, the 16th of February. Buy the butterfly. Here it was. Buy this butterfly at around $12. $12, right? Incredible. So then here it was on the 16th, day of expiration. Tesla long monthly butterfly. Now it was trading up. It was trading at $200, right at our pin. It was up $215 per spread, a 1,791% return at that point. And here it was right at the end of the day. It was trading right here at the end of the day. Perfect pin at $200. It was up $230 a spread, 1,916% return. Just unbelievable. So you can, point is, you can make these kind of returns, with the right strategy. So here it was. We set it up here, looking for a pin here. It went 200. So did this butterfly, 197.5, 200, 200, 200, 202, 50, $2.50 widespread, 12 cents, 12 bucks, potential to make 238, 1,983% return. Or if you did anything in between, you still had a fantastic return. Now we'll scale out of these things, but that's what you would have had right at the end of the day. So here it was right at the end of the day, perfect pin right there. So it's trading right there, 200 bucks. Went from 12 to 250, $238, 1,983. Now you would, some may have got it right here, but if you got anywhere in here, you still had a huge profit, right? But that's what we're looking for, and that's what happened. And here was another one that we did, GLD. This was a nice one. That was one that we did in August. So these are very selective. Sometimes, we're finding these things. And then if you do have a loser, they're tiny. Okay, this is one that we did. It said UGLD long binary call butterfly. So we were targeting this one for 225. Then we rolled the spread a little bit and adjusted it to target going through it real quick, the 230 strike. So ended up with this, then on the 16th, it was going out right here. It was looking really good, trade around 229.88. We were targeting 230, trending towards our body or butterfly 230. If long, the 16 butterfly, blah, blah, blah. Look to take profit today before the close. The closer to 230 into the close today, the greater the profit. The potential max profit would be around $270, 900% return. Currently up $150 per spread. And then here it was later in the day. It was currently up around $200 to $689 or 689% return. So here's where we set the trade up, looking for this pin at 230. Here's the spread that was sent out, 227, 230, 230, 233, 29 bucks. Spread cost, risk there, $3 wide spread, less our cost, potential to make 271, 934% return, or anything in there is still a big, huge return. Here's where it went out, right there, right towards the end of the day, trading right here. 230.47 went from 29 bucks to 232, so $203 per spread, 7% return. So these are really fun and huge potential winners. And then here's the other, we do a lot of these as well. These are calendar diagonals. And so these are actually, we've done probably more of these than anything, but started this back in 2019 through Friday. We've had 327 closed out, 236 winners, 20 break even, 71 losers, 78% win rate. Again, unaudited. And here's kind of a couple that we did recently. This was on, we've been doing lately more butterflies and condors because the market's been so volatile. So when we get in a lot of uncertainty, volatility, we reduce the trade costs and capital at risk, by doing, things like butterflies and condors. So this one, the last one we did here, this was on CCJ. This one was back on the 21st. Here's this new CCJ long trading at 53, daily cycle low, retrace reversal off 200, breaking back above the 21, daily volatility squeeze, positive momentum, target 154, target 255. So this is a very low risk trade when we set it up. So here it says do the diagonal, 7 Feb, long, 24 Jan, 53.55 at around $1.95. And then here, we do a couple adjustments, do a lot of different things here. And then here it was on the 24th. Now it's trading at 58. If long, the adjusted 54, 58, we did adjustment to adjust the trade, currently up around $282, 151% return. So this was the calendar diagonal. So here was where we had the trade set up. Again, indicators, same steps. You can see cycle reversal, momentum, entered here, out here, out here. Here is the trade. So this is what we call a long call calendar diagonal. So after the adjustment, we were long the 54 call, short the 58, 7 Feb long, short the 24 Jan at 186, spread blue to 483. So we're up $297 per spread on a risk of 186, up 159% return. And here's one last one. This was a pretty cool one. This was on XLE. I'll go through this kind of quick, but this is one that we started out with a long call condor, and we adjusted this to a free trade. We actually had this as a calendar and then ended up with a condor free trade just to show you. So always looking for ways to increase the profit. But again, just looking at the same steps. We had a cycle reversal, momentum, went long here, did some adjustments out here, ended up this one being adjusted to a free, what we call a free trade, into a long call condor with zero risk. So trade setup was 85.70, ended up at 88.77 right there. So it went from a 3 cent, we adjusted this down to where we actually had a credit of $3, flew up to 189. So this was up $192 per spread on zero risk on that. So, these are all the different things that we do. And again, if you'd like to learn more on how to zero in on the very best trades in 2025 and avoid having to be spending your precious time, capital, and energy trapped inside losing trades that you're having to manage, join this program and let me do it for you. All right. Or